Yeah, I know. I keep noticing that and trying to pull my camera forward. Welcome to QAV America, episode 36, Tony. We just came out of our Australian show. One of the things that we did talk about, though, on that was an article I saw in the New York Times this week about the state of the US economy. I think we've talked recently how the Trump tariffs don't seem to have had the negative impact on the economy over the last year that we thought it might. But according to the New York Times, and the economists that they're talking to, the US economy is doing well despite the tariffs, not because of the tariffs. They're basically saying the AI boom is what's keeping the economy going in the US, and it's offsetting the drag from the tariffs. It's quoting Geeta Gopinath, a Harvard economist and former first deputy managing director of the International Monetary Fund, said the AI boom has basically offset the drag from the tariffs. But manufacturing is struggling, particularly small manufacturers are struggling. The job market is anemic. Tax deductions aren't helping. Manufacturing is just not getting the wind under its sails that some people thought the tariffs might bring. But as we talked about in the last show, I mean, trying to bring manufacturing back to a country that's been offshoring it for 40 years was never going to be a short-term or easy process. You know, may pay off. And we talked in the last show also about, you know, how difficult it is for businesses to make long-term commitments to major investments to rebuild manufacturing capability when they don't really know how long the tariffs are going to be in place for. You know, if the midterms go ahead, and there's a lot of talk in the mainstream media at the moment in the US about how the midterms may not go ahead because President Trump seems to be suggesting it from time to time. We don't really need to have the midterms.
Is that the president?
And then his press secretary will come out and say he's only joking.
Who's the president of Venezuela? I thought. Yes, right.
He Same is guy? Also okay. That. Yes, he's and the new Nobel Prize winner or recipient, maybe not winner.
I didn't know there was a market for used Nobel Prizes, but good to know.
I believe he's also going to win the Oscar for Best Actor this year, Best Director, Cinematographer, Nobel Prize in Chemistry, Physics, Biology. It's like Pokemon, got to collect them all. So the US economy is trickling along, but, you know, very much driven by investment in AI data centers, the people that have made a lot of money out of investments in the Mag 7 are putting some of that back into the economy, spending on goods and services. But then a lot of talk about that being a bubble. I don't know if you saw this, if we talked about it last week, I can't remember, but there was an announcement in the last week that Apple are going to base the next version of Siri not on homegrown technology and not on OpenAI's technology, which seemed to be the direction they were moving on, but they're going to build it on Google Gemini.
A competitor.
Which puts a big question. Well, Google, they've got like a weird relationship with Google. Google's paid them billions of dollars a year for many, many years to have Google Search featured prominently on the iPhone, even though they are the competitor with Android. But now they're going to, the next version of Siri is going to be built on Gemini. Now it puts OpenAI's future with a big question mark over it. I assume that their lifeline was going to be being the default on iPhones. They're not going to be the default on Android phones. Now they're not going to be the default AI on Apple phones either. So there's a big question mark about how long they can continue to operate, how much money they can Sam can continue to raise, and if they fall over, that could have a massive impact on the Mag 7 AI bubble.
Maybe there'll be a return to the Microsoft phone to put OpenAI on it.
Yeah, well, Microsoft might end up buying OpenAI. Microsoft or Meta would be the obvious two to end up buying, or maybe NVIDIA will buy OpenAI and just bundle that into the NVIDIA software
I had my
stack.
brother-in-law, stay with us over the weekend, and he's retired recently and planning a big caravan trip around Australia, which is, for our US listeners, is one of the goals of a lot of Australians to do when they retire.
Yeah.
And he has all these bookings and destinations and timings in a spreadsheet. And I forget now what question he was Googling. And it came back, based on your spreadsheet about the type of caravan you own, I suggest this. And like he's going, how are you reading my spreadsheets? And we worked it out, and he's got Microsoft Copilot in his Excel subscription. So it's going through his spreadsheets.
Right. Yeah. Which is what I want. I want it to know everything about me so it can give me better stuff. OpenAI also announced this week they're going to start rolling out ads in the free version of ChatGPT in coming weeks. So that'll be interesting. Well, anyway, moving right along to my deep dive of the week, Tony. This is a challenging one. It is at the top of my buy list this week. And I was so not confident about it that I didn't add it to the portfolio this week. I'm like, yeah, I'm talking to Tony before I add this one. But it's a crazy story, which I hadn't heard of before, but I've spent way too much time reading about this company and its
Before
travails.
you launch into that, did you get the link to the story I had on shipping companies? I sent it as part of my notes. So just a quick one. There was an article I read in the Wall Street Journal saying that the headline is Tanker Tycoons and the Oil Brokers Cashing In on the Venezuela Trade. So I don't know if these are in our buy list, but there was, so the article mentions oil traders Vitol, V-I-T-O-L, and Trafigura diving back into Venezuela after Maduro's ouster. And it does mention some of the other companies as well, like TK. I think you've done a pulled pork on TK or mentioned TK. TEEKAY.
Yeah.
Anyway, I won't read the article, but people can Google it. But so we've long had tankers and tanker companies on the US buy list, and they are making out like bandits going into Venezuela and shifting oil to the US at the moment.
Ah, interesting. I still own a couple in our our US portfolio. TEN, Sarkos Energy Navigation, they've just had a huge jump. Let me see, gas, they're up. So maybe that's why our portfolio is actually doing really well. I mentioned this last week, but like in the last, last month, the last 30 days, our US portfolio is up over 16% versus the S&P up about 1.5%. That
coincides with the election of Donald Trump to be president of Venezuela, doesn't it?
Yeah. In the last 90 days, our US portfolio is up 23.5% versus the S&P up 4%.
Wonder if it's the tanker companies then.
So, Willis Lease Finance Company, which we talked about last week, is leasing commercial aircraft and aircraft engines, is booming back up again. It's had a good month or so after declining for most of last year. It was up 300% at one point, and then it declined back to up 200%. But it's had a good couple of months. If I look at all of our charts, a lot of. Let's see, last month. Innova International is down a bit. Euroseas is actually down a bit. Another shipping company. Regional Management's down quite a bit. But Stealth Gas is booming. KT is up. Korea Electric Power is up. Yeah, it's a mixed bag. But the ones that are up, really, like Willis Lease Finance in the last month has gone from 135 to 185. So, it's had a really good 30 days for some reason. I have no idea why.
Do you have TK
on
the portfolio still? Oh, okay.
I don't. Yeah. I think I did at one point and I had to sell it. while I'm here, our QAV Light portfolio, which is about a month old, is not doing well, surprisingly. It has not had a good month. It's down about 2% since I bought it versus the S&P up 1.5%. So the stocks that we've been adding lately have not had a good start. AMCX is down 15%, GTN is down 12%, VLRS is down 6%, and Ziffer is down 1%. We talked about last week. Yeah. But, it's early days, so I'm not really worried a great deal about that. The market generally the US market has not had a good month for a whole variety of reasons, so unless you're in Mag 7 land. So, it's just tracking along. But this company that I have to speak about today is, what a corker. So it is called AMTD, the AMTD Idea Group. And, wow, it has a background that is kind of crazy. So, you ever heard of these guys before, Tony?
I did some Googling after you told me you're going to talk about them, and I agree. Wow.
Wow. At first glance, it's a luxury suitcase at a thrift shop. Mm-hmm. You go, wow, this is cheap. And it's got so many beautiful aspects to it. Imagine buying $1 worth of Ritz-Carlton hotels, fashion magazines, Asian banking connections for about 4 cents. But the catch is, the guy selling it to you, straight out of a Scorsese film, and the auditor signing off on it is based out of a strip mall in Singapore. There are a lot of question marks over this company. Not to say it's not a good investment, not to say that there's anything untoward about the company at all. But I did have to hold off on this before I spoke to you because it was quite concerning in many ways. So the origin story actually is based in Australia. No, did you come across that when you looked at it? The company was born in 2003 when the Commonwealth Bank of Australia was one of the founders of this business with Li Ka-shing's C.K. Hutchison, Hong Kong billionaire. His company owns the majority of Hutchison Telecom around Asia and TPG in Australia, which used to be Vodafone Hutchison. Plus has businesses in retail, ports, energy. Alipay Hong Kong is a joint venture between Alibaba and Hutchison. Li Ka-shing himself is still kicking around. He's 96 years old, 38th richest person in the world. But his stake in this business has been reduced down to about 4%, and the Commonwealth Bank got out. I think after the global financial crisis, Commonwealth Bank exited some of their more spurious Asian venture capital-y type investments and decided to concentrate on actually running a bank back home. But this started off 22 years ago as an Australian-style wealth manager for Hong Kong's emerging middle class. Let's put together a fund and go and buy big assets that you wouldn't be able to get into necessarily as an individual investor, and we'll go and buy these we'll buy hotels and ports and shopping centres and things like that. The AMTD originally stood for add, minus, times, divide. The 4 basic operations of mathematics, seriously. It was supposedly based on fundamentals, no-nonsense finance, mathematics, etc., etc. Fast forward to about 2015 when the story takes a hard turn. A guy called Calvin Choi basically took over the operation. This is the guy that should be in a Scorsese film. He was the former managing director of UBS in Hong Kong, I think. And he sort of exited and brought together Morgan Stanley's private equity arm and a few other big banks and basically engineered a bit of an investment / takeover of AMTD with himself as the guy running operations. And he wanted to turn it into something different, what he calls a SpiderNet, which I gotta love, honestly. If you have somebody saying that, yeah, this is a SpiderNet, it's a SpiderNet. I kind of love the visionary aspect of. Reminds me of the .com days when I was working at Microsoft, and I'd have entrepreneurs that had come in and they'd say, "Let me show you what we're doing," and they get a pen on a whiteboard, and there'd be lots of lines and things going around, and because they wanted Microsoft to invest in it, and I'd spend an hour listening to them and go, "I have no idea what the hell you're talking about. We're pass. It's a pass." Honestly, if you can't explain it to me in about a minute, I'm passing. It's way too complicated if it takes you an hour on a whiteboard to explain it. This is one of these things. But after Choi got Morgan and Stanley involved, he left UBS and he took over this thing. Two entities, one called LR Capital and one called CM International, which was a subsidiary of China Minsheng Investment Group, acquired a 71 stake in the operation. Now, this sort of converted AMTD from more of a conservative wealth management Commonwealth Bank sort of thing. For US listeners, Commonwealth Bank is one of Australia's oldest banks, used to be run by the government, hence its name, got privatised in the 90s, I guess. Now it's publicly listed, but, it's been around for a very long time and has a reputation, or had a reputation, of being pretty conservative bank in Australia.
Importantly, it's a retail bank too.
Probably
more like a savings and loan in the US.
Yeah. So it sort of got reinvented by Calvin Choi into an aggressive capital markets player. CMIG, the China Minsheng Investment Group at the time, was a high-flying investment conglomerate in mainland China, often compared to a private sovereign wealth fund. Got themselves into some trouble a little bit later on with a mountain of debt and fraud allegations, and it's still around, I think, but it's being restructured. And Calvin Choi was, as I said, former UBS banker, was installed as the architect of this new AMTD, was going to diversify them away from basically, conservative insurance brokering into investment banking, asset management, and a fintech player with lots of different assets and lots of different things. Now, this guy is extremely controversial. He sells himself as a great visionary, but he's also got himself into a whole bunch of legal problems in Hong Kong, which has made his reputation in Asia fairly binary. I'm not sure how many people think of him as a visionary and how many people think of him as a con man, but he said he wanted to build a century-old enterprise utilizing the SpiderNet ecosystem, which he invented this term. Basically, as I understand it, it's when a network of clients, investee companies, and partners all do business with one another, theoretically creating a self-reinforcing loop of value. Actually, it doesn't sound that much different from the Mag 7, right? NVIDIA. Yep. We'll give you money, OpenAI, as long as you come and buy all of our stuff, and etc. Maybe he is a genius. Maybe he's a very stable genius. He described AMTD as a super connector between the capital markets of the East and West, creating a digital ecosystem that would rival the established banking giants. Meanwhile, the Hong Kong Securities and Futures Commission, the FFC, found that while he was a banker at UBS, Choi failed to disclose material conflicts of interest regarding transactions involving LR Capital Financial Holdings and China Minsheng, and also a company called Xinte Energy, revealed that when he was acting as a UBS advisor to clients, he simultaneously held a hidden beneficial interest in the counterparties, i.e. LR Capital. So he was basically advising on one side and owning the companies that were taking an interest in these, or having a stake in the companies that were having an interest in this. So the whole acquisition of AMTD via LR Capital that UBS played a role in when he was at UBS. He also had an interest in some of these businesses. Anyway, basically, he was banned by the SFC from the industry for 2 years, September 2023 to September 2025. So he managed to serve that out. I think he had to step down as chairman of AMTD while all this was going on. It prohibited him from acting as a director or taking part in the management of any SFC licensed corporation in Hong Kong. He appealed, but his appeal was rejected and the ban was upheld. So, Buffett and Munger, you were talking about them just last week as saying, you find people that you can trust and then you invest in them. Not sure this guy really hits that benchmark on the surface of things, and I'm not passing judgment on Mr. Choi at all. I'm just saying that on the surface, it seems like he's a bit of a controversial character. That said, he did restructure AMTD and they've made a whole bunch of investments, which we'll talk about soon.
I think if I can just chip in here, Cam, with the positive side of his story, it's just to kind of balance out the narrative a little bit. It looks like from what I saw, he was one of the first, I think he was an audit partner at PwC, or one of the big accounting firms. And he was one of the first to go into Hong Kong after it was handed back to China. And he became very, very well versed with the ins and outs of Chinese banking. And I think that's what led him to say, hey, I can do a lot of deals here and benefit from my knowledge and bring access to these companies which haven't been part of the global stage for a long time. So I think that's the plus side that people saw in him and what he was trying to do. And then, the negative side is that there were accusations of being on both sides of deals. So he was advising on the purchase of something he had share ownership in, for example. So, as you say, controversially viewed.
And that's not even the interesting part of the story. That's not even the crazy part. So the crazy part is what happened in 2022. So he spun off a division that was called AMTD Digital. It was a fintech digital division that was also floated on the New York Stock Exchange. So the ticker for AMTD on the New York Stock Exchange is AMTD, and that's the company that we're talking about. He floated off AMT Digital, which had the ticker HKD. 86% of it, was owned by AMTD Group. And then it went nuts. So it floated, and so I think it IPO'd July 15th, 2022 at $7.80. And then the share price immediately went up by like 30,000% in a couple of weeks.
MTD GameStop.
At one point, well, see, this is the thing. 18 days after the IPO, it hit $2,555 per share from $7.80. That briefly gave it a market cap of over $310 billion, making it the 14th largest company in the world. Larger than Bank of America, larger than Coca-Cola, larger than Shell and Costco combined. The punchline was its reported revenues were about $25 million. So at its peak, it was trading at over 16,000 times sales on around about 350,000 shares traded in a day. Now, that's the digital, the HKD business. AMTD Idea, the parent company, kind of got swept up in that. Its share price surged 300% in the same week. It was the highest traded stock on August 2nd.
Because its own shares, it still had 85% of the digital company.
Exactly. Now, why all this happened? No one
I did
knows.
see some analysis to say that HKD, the ticker code, might be involved. Yep.
I read 4 theories. One is that people confused it with the Hong Kong dollar, which sounds too stupid to be true, but hey.
Didn't the ASX that looks after the Australian share market confuse two companies with similar names?
They did. Yeah. Now, one of the early theories was this was all happening during the GameStop AMC Wall Street Bets kind of shenanigans. One of the theories was that they were involved. The Wall Street Bets mods came out and said had nothing to do with them. They absolutely denied any sort of organized campaign. There was no evidence that retail investors coordinated the pump like there was for GameStop and AMC. There are also theories that there was some IPO underwriting shenanigans. Several Asian companies had similar abnormal trading. Underwriters were accepting partial payment in warrants rather than cash, creating incentive schemes to artificially pump the stock post-IPO. But again, no evidence, no lawsuits brought against anybody here, so I'm not making any allegations, just saying this is one of the theories that I heard. The fourth was that short sellers openly called it suspicious. They said that there was some sketchy stuff going on. They were questioning how regulators allowed this to happen, that there was some sort of sophisticated manipulation going on behind the scenes.
Short sellers are like horse trainers. When they lose, they just reach for the playbook and say the same things every time and blame everyone else.
Yeah. Blame everyone else, yeah. But here's the thing. There was no investigation that I could find out about, despite what seems like obvious market manipulation.
Well, maybe.
The SEC, well, something was going on, but there was no regulatory investigation launched, no statement from the company, nothing. SEC Chair Gary Gensler even lauded the Sarbanes-Oxley Act on the same day that HKD hit its peak. Investors had GameStop halted, but HKD just ran wild. The Hong Kong SFC did take action, but against peripheral issues. As I said before, other stuff, he got his 2-year ban, but it was about the UBS stuff, not about this share price thing. So, I
also wondered whether it was a free float liquidity issue because the parent company owned 85% of the stock. And going back many, many years before better regulation in Australia, a method of people who had lots of money to make more money was to buy most of the shares in a company, float it, trade off a small portion of it, and then it would take almost nothing to ratchet up the share price, just a little bit of buying to inflate their value. And then for whatever purpose they could sell out or they could borrow against the valuation or whatever, they made a lot of money. So it could also be a small float thing as well. If there's a lot of water trying to go through a thin funnel that creates pressure on the price. So, yeah.
So, you have your shares at $7.80, you sell them at $2,000 and
correct.
Happy days. Anyway, the stock crashed. By mid-August 2022, it had fallen 90% from its peak, but then HKD surged 300% in a single day in September 14th, 2022, without any news to justify it. And then in January 5th, 2003, shares shot from below $10 to nearly $30 in one trading day before falling back again. So each time, no explanation, no catalyst, no investigation, just the share price going nuts and then falling back to where it was. So, again, this is HKD I'm talking about. This happened, not AMTD, different ticker, but same company, basically, same management. Calvin Choi's running these things. And there's this reputational scar issue, I think, that's still haunting both shares today. And again, no investigation into why any of this happened. So nobody knows what's going on. Everyone's, I guess, too busy making money out of the bank.
I wonder if,
to worry about it.
I'm only speculating here, but those 2 second sort of false starts, I wonder if that was an attempt to restart, to prime the pump, so to speak, to get momentum going for a larger run, which someone could have sold into. But who knows? Could have been a fat finger thinking they were buying Hong Kong dollars too.
Could have. Yeah. So anyway, as I want to point out, that's HKD, not AMTD, but again,
the SpiderNet.
There's a lot of overlap. The SpiderNet, yeah. And there's other stuff as well. So they did the Paris pivot in 2023. So August 2023, they announced the migration of their headquarters from Hong Kong to Paris.
Why not?
The financial brain is still in Hong Kong.
Why not? Yeah.
Why not? Why not move to Paris? Yeah. Well, the reason for it is they bought a magazine that's sort of the basis of the fashion empire, as I understand it, in France.
Oh, they bought the magazine company. I thought you meant they bought one edition from a newsstand.
One magazine.
I love Paris.
Like, this Paris place looks great. We should move to Paris. Yeah. L'Officiel, it's actually got a much longer French name, but we'll stick with that. Founded in Paris in 1921. It's the official publication of Parisian couture. For a century, it's been the Bible of fashion and high society. Famously, apparently launched the careers of Christian Dior, Pierre Balmain, Yves Saint Laurent. Not just a magazine, it's like the basis of global luxury culture. And revenues have been going backwards, circulation have been going backwards. As you can imagine, magazines have been struggling for quite a long time now. These guys picked it up, came in as a white knight in 2022 to acquire 100% of the brand from the Jaloux family and a company called GEM, and sort of mixed their business from a pure finance firm into more of a SpiderNet conglomerate, mixing investment banking with high-end media, and is now involved in a number of legal cases involving that. The companies, the Jaloux family, and one of the other companies that was involved in all of this is, CMIG are suing him. So Choi has been accused by CMIG of financial fraud relating to the original buy-in to AMTD, claiming some projects actually made money, but he didn't give us the profits, and some had losses, but we don't know whether he truly invested or misappropriated the money. And more recently, the Jaloux family, the previous owners of L'Officiel, have launched legal proceedings against AMTD for trademark infringement, tax fraud, and misuse of corporate assets. They're claiming they didn't receive full payment for the transaction. So the stock price surge, the UBS, SFC banning, now legal claims, and it's all very murky. When you try and figure out the financials for this thing, not to mention the audit situation. So they've changed auditors every couple of years. 2014 to 2020, Ernst & Young was AMTD's independent auditor. Then they were replaced by Deloitte from 2021 to April 2024. Then they were replaced in April 2024 by a company called Audit Alliance. Not one of the big four. Now, this is a big multi-billion-dollar company on the New York Stock Exchange. You go and have a look at Audit Alliance's website, and it looks rinky-dink. It's like as I said earlier, based out of a strip mall somewhere in Singapore. It does not look like a very high-profile auditor. Why? Their official rationale is they have an auditor rotation policy for international best practices. But why you would rotate from two big four firms to a small regional player is hard to fully understand. It looks a little bit suspicious and dodgy. Not casting aspersions, just saying. It doesn't sit well with me. So anyway, they get a clean audit. I went and read their audit to make sure there was nothing dodgy looking in the audit. Audit Alliance gave them a clean bill of health. So as far as I know, it's all above board, but I'd be much more comfortable if it was coming from a big firm. But, so that's all of the nasty, dirty side, scary side of it. On our checklist, it looks insanely cheap. But what's really going on is a little bit hard to pick up. According to the financials, they're currently generating, they report in USD, by the way, these days. They're currently reporting $90.6 million in operating cash flow, and the entire market cap is about $70 million for the company. So you're effectively paying 77 cents for every dollar of cash flow that the company's generating. Price to earnings is 2.11. Price to book is 0.04. You're basically buying $1 of assets for 4 cents. The book value per share is $23.52. The current price is about $1.02.
That's the question here, sorry, Cam. I'm a little bit confused. Are we talking about AMTD IDEA? Is that the company? Yes, that's what I thought so too.
Yes.
So
IDEA, yeah.
I thought operating cash flow was about $5 million in the last 12 months. Just going to go to Stockopedia and have a look.
Well, it's not what it says in my spreadsheet.
So I just thought I'd pull you up there and have a look.
It says 90.5 TTM. Bringing up Stockopedia as well.
To be honest, I got my number from ChatGPT, so it could be different kind of.
Tony. Jeez, Tony.
$1.34 per share is what I'm seeing in. That's in Stockopedia. That's per share though. Down 50%, 48.9%.
Actually, 2024, it has 5 million. Cash from operating activities, 5.16, down from 40 the year before. But 2025 TTM, according to my spreadsheet, says 90.
I'll go with you then, because ChatGPT.
But I can't see that. I can't see that.
Well, just ChatGPT might be wrong or out of date.
Well, 5 million was right for 2024 financial year, but it's claiming that their last financials were very strong. So if you look at the latest news, I'm on FinViz now. Here we go. This is December 30th, 2025. AMTD Idea Group achieved 150% increase in revenue. Total net income surged 63.7% to US $68.8 million. Total assets amounted to US $2.193 billion.
Okay.
So yeah, they're claiming they had a really good month. Yeah. But Here we go. The company's revenue for the 6 months ended increased from 36 million in the first half of 2024 to 89 million in the first half of 2025. The increment was primarily attributable to hotel operations, hospitality, and VIP services income rose from 7.9 million to 12.7 million, representing a 60.3% growth. Dividend and gain related to disposed financial assets at fair value through profit or loss changed from 8.7 million to 8.6 million. Net fair value changes on financial assets at fair value through profit or loss rose from 7.2 million to 56.2
That's a red
million.
flag.
Hold on, I'm not finished. The increase was mainly attributable to the unrealized gain on the company's investment portfolio in the first half in 2025. So, I've got this in my notes.
Well, an unrealized gain on the investment portfolio
on.
makes more sense to me because it's certainly been the case that if like it was saying we have a property portfolio or a commercial property portfolio that was worth a lot more this year than last year, that would be a red flag because I've seen people do that, and it's commercial property just doesn't move that quickly.
Yeah, but what that increase is in and where it came from is not
right.
Clear.
So when it says investment portfolio, we don't know if it's stocks or whether it's companies or property or what.
Yeah, look, it's hard to unpick, and I think that's one of the problems with the SpiderNet is
you get sticky fingers and you can't get out.
Like if I keep reading down this financial statement, it says the company recorded a profit of 68.8 million in the 6 months ended June 30th, 2025, a growth of 63.7%. Mainly resulting from the additional contribution recognised from the company's hospitality businesses and the gain on its investment portfolio. Subsequent events, TGE, which is one of the businesses they've bought, has successfully executed the sale and purchase agreement for the acquisition of 100% interests in the Hilton Garden Inn, New York City, Tribeca, with the payment of an irrevocable deposit in December 2025 and the goal of closing the acquisition of this hotel within the next 2 months. So whether or not that factors into it, I don't know. They also entered into sale and purchase agreement to purchase an 80% stake in the Upper View Regalia Hotel in Kuala Lumpur. They've also agreed to buy a 50% stake in the Ritz-Carlton Hotel in Perth, Australia, with a total value of $280 million. They also have a special purpose acquisition company which is doing a successful public offering of 15 million units at $10 a unit. So and the TGE successfully completed a secondary listing on the London Stock Exchange in December 2025.
Yeah,
so,
right.
Like there's a lot of moving parts in this, and you know how much of it is something you'd want to invest in, and how much of it is, look at all my circles and lines connecting them on a whiteboard. And that's, for new listeners to QAV, we don't claim to be experts on anything apart from your system of scoring companies based on their fundamentals. And you know a lot more about certain sectors because you've worked in senior executive positions in retail and energy. I know nothing about anything except maybe Kung Fu and history. So I'm not going to spend, I already spent a couple of hours reading up on this business. I'm not going to spend a week studying the intricacies of the financials. Unlike a Buffett or a Munger, that's not what we do. We tend not to look at anything, really. I just see it on my buy list and go, all right, I'll do a quick check on it, make sure that they're not a well-known criminal organization. But apart from that, I'm going to go, yeah, all right, it's at the top of the list. The more I read about businesses like this, the more I'm like, oh my God, really? But, it's hard to tell. Like, they seem to be making money. They're definitely scoring very well on the buy list, but whether or not it's smoke and mirrors, I don't know. But my basic summary was going to be this. there's a trust problem, I think. Why is it so cheap? Okay. Basically, the market is screaming, we don't trust you, I think. Between Calvin Choi's regulatory history and the SFC ban, the unexplained meme stock explosion of HKD, the corporate structure so complex that it makes Enron look straightforward, a small Singapore strip mall auditor with a very questionable looking website, outstanding lawsuits from former business partners, and it's fairly small. I think it's the average daily trade is about 253,000 US. So big funds, even if they would touch it, can't. It's too small. It's too small even for you to invest in. It wouldn't even meet your benchmark, which is a lot bigger than that. So the number, it's all very murky. It's very complicated. It's this guy is either one of the greatest geniuses ever to be working in investment banking in Asia, or, this is Enron 2.0 waiting to fall over, right? Yeah.
I mean, to me, it looks like a very entrepreneurial financier has tried to exploit their contacts and their knowledge of Chinese banking to make money, and it's become a big spider web of individual deals where he's connected money to assets, and now it makes the whole thing a spider web, a conglomerate, very hard to pick apart and say, is it a hotel company? Is it a magazine company? What are the assets worth? Et cetera, et cetera.
Yeah. Is it a masterclass in the optics of value? Hey, look, we own all of these really flashy assets, which may be mediocre assets in the case of the fashion magazine is one example, and circular cash flows that are too hard for anyone to track and follow? Or is the guy a genius? Look, I was around enough in the dot-com days, as I said before, to come to the conclusion decades ago that if I can't understand it in 5 minutes, then it's probably not something I want to get involved in. But the flip side to that is, do I want to think I'm smarter than the buy list?
Very, very cheap.
And it's very, very cheap.
Being rewarded for the risk, aren't you?
Yeah. Maybe. I mean, so look, the bottom line is, if I look at the scorecard, the checklist scorecard, the price is lower than our IV number one, a lot lower. Price is $1.02. IV number one is $2.48, so it's trading at less than half the intrinsic value. It's a lot less than book. As I said before, the book price is $23.52, so it's at a 96% discount to net asset value. But how much of those assets we own a luxury fashion magazine in Paris, I can't say, versus hotels and what hasn't closed and et cetera, et cetera. Price to operating cash flow is insane. As I said before, 0.77, I think is one of the lowest I've ever seen. Book value growth is actually positive, 29% CAGR over the last few years. So at least in that metric, if you can believe those numbers, it looks good. On the negative side, from a Stockopedia perspective, it didn't get a score for quality rank or for stock rank or for F score. So,
how are you reading the buy list chart on this one? Because I've got it as a sell. Yeah. Sorry,
buy
the
list
Brettolator
chart. Oh, I'm glad you asked. So yeah, the Brettolator, because I knew, I don't use the Brettolator when I'm doing this. I use my script, and my script looks at Yahoo Finance, not at Google Finance, which the Brettolator is based on. Even the Brettolator, though, the Brettolator, for new listeners, is a charting tool that one of our Australian listeners built for us a few years ago that builds a sentiment chart based on 5-year and monthly prices, and we write buy lines and sell lines. You can see the H1 and the H2. The H1 is $43.20. The H2 is $41.88. But that is less than 8% of the H1. So even if you were doing it with those numbers, you should be using May 21 as the H1, and then you'd have a much lower H2 just a few months ago, I think, that it would go through. That said, when I checked the Yahoo Finance numbers, they had very different numbers. Well, actually, not very different, but they didn't have even May as a peak. They've got March close at $43.20, April close at $42, May close at $41.88, June close at $36. So they had March as the H1, and then it just goes all the way down.
Well, the breadlater is the breadlater should take 8% into account.
It should, but it didn't for some reason on this, so I don't know why. So anyway, yeah, when I manually did the chart in Stockopedia, which actually looks very similar to the breadlater numbers, but I took the March 21 as the H1, and then I drew it through, I think it's, I don't know, September or something, 2025 as the H2. So yeah, it passed that on for me. But anyway, bottom line is, Tony, what do you think?
What do I think?
Yeah,
it's a tough one, isn't it?
Do we second guess the buy list, or do we just trust the buy list?
I'm a little bit concerned about sentiment here because I'm looking at the breadlater, but I accept that the breadlater may have got the code and numbers or the H1, H2 wrong, but I can't explain that. Otherwise, the numbers stack up. I mean, there's been plenty of times in my investing life that I haven't liked the company that's number one on the buy list, held my nose and bought it. We're not betting the house on it. It's one part of our portfolio, and if it becomes a sell, it becomes a sell. So that's how I approach it.
Yeah.
To do any sort of justice to analysis of this company would take days and days to try and pick apart its assets, put a value on them.
Exactly.
Check its cash flows, all that kind of thing. So, yes, well, I agree with you. It's very murky, a little bit suspicious.
Yeah.
But the numbers are the numbers.
Well, I remember when I did a pulled pork on Zepp, the Chinese smartwatch company, I had similar misgivings because it kind of looked a little bit sort of sneaky. And you said, I like it. And it's up 700% since then. So.
I think Zepp's on a different street compared to this one. Yeah.
It is. But it was still a little bit hard to see whether or not it was dodgy without knowing more about this smartwatch.
I think the thing that seems the dodgiest to me, apart from all, like this person is clearly entrepreneurial, and those kinds of people always attract lawsuits and detractors and run-ins with regulators, etc., etc. I won't say worry. The most interesting thing for me is the fact that they've gone from using Big Four accounting firms to an unknown firm. I don't want to disparage the firm they're using. I just don't know enough about them.
Disparage?
Yeah.
Is that the French way of saying disparage? Right.
I can't comment on the firm they're using. I don't know enough about them, but they seem very small for a large global international firm that's now operating at least in 2 countries, if not more.
Yeah.
It's strange they're not using a Big Four accounting firm. And given that his background's in auditing, you wonder if he has enough knowledge of auditing to know that he shouldn't be using a Big Four firm. I'm extrapolating here.
Well, I'm sure he does.
Yeah. I'm skeptical that all he's doing is trying to save on audit fees, by going with a small company.
Could be. Yeah, it could be right. But have you been to their website? Did you have a look at it?
They proudly announced that
they had firm?
$16 million of fees in the last year.
Yeah. Singapore's largest USA-listed co-audit firm is their claim to fame.
Could be very relevant in that market and very dynamic in that market. Who knows?
Could be. But yeah, it looks
I don't know if it looks
dodgy.
I don't know if it looks dodgy. The fact that they've gone from using a big four firm to a small local firm doesn't look great. Yeah. The firm that they're using, I've got no idea if it's dodgy or not. I'm not going to say. But the fact that they've been using big four firms until recently is a bit of a red flag for me.
Yeah. For some reason, I was just going to cover off on our pulled pork track record so far. Mostly doing well. We've up until this week, we've done 32 stocks. 25 of them are in positive territory. 7 are in negative. But MODG, Topgolf, isn't coming up for some reason, and they've changed their ticker to Cali. They've gone, what was MOGG stood for? It was like modern golf. They've changed their ticker.
Get back to Cali.
So there you go. You're going back to Cali. Do you know that? You wouldn't know that. Going back to Cali? Ella.
Joel. I like early rap.
Who are you and what have you
stuff after that? I love LL Cool J. In the early days, anyway.
It told me you like
the original
rap
stuff. Beastie Boys, I love.
The Beastie Boys.
I love the Beastie Boys.
You like the Beastie Boys? Yeah, okay. Okay. Going back to Cali. So, yeah, they are going back to Cali. I'll have to change that in my spreadsheet. All right. Well, should I add them to QAV Lite, Tony? We're going to take a punt?
So. Yeah.
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 Well, like, that's the question. So the question, I'm going through all of this going, listen, am I an expert on the intricacies of this? No. The market obviously thinks this guy's something dodgy's going on, but, we don't trust what the market thinks. The sentiment, it passes the sentiment, even though the chart doesn't look great. It does pass our sentiment. It is up a little bit, and it's
I mean, like it's
gets
like
a good score.
Almost everything else that we
Thank you.
As you said before, like I don't know anything about gold mining or coal miners, and even big banks or whatever else we have on our buy list. So Chinese watch companies on the US buy list I know nothing about. So we trust the process.
Right.
And then, but more importantly, we have sell.
We trust the process.
I think the big difference with us is we have sell processes. And if we need to, we get out and cut our losses.
Yes. Well, speaking of which, a couple of the stocks that I have added to QAV Lite, I should probably have broken their sell lines, but I haven't sold them because it's only a couple of weeks in, and it was sort of Christmas, New Year, and I'm giving them a little bit of leeway. I'm like, I'll give them Huh? Well, look, my rule normally is to give them a month. If I buy them and they immediately become a 3-point sell within like a week or two, I'm like, well, if they were close to the 3-point sell line when I bought them and it fluctuates a bit and they go down, I'm like, I give them a month to sort of settle
rules.
in. Yeah, well, you said they're guidelines, not rules, Tony. But yeah, I think I am going to have to sell. I think AMCX or GTN or one of those is about to hit its month. I think the 22nd is the month. If it gets to the 22nd and it's still a 3-point center line, I'm going to dump it and replace it with something else. But okay, well, there you have it. That is my pulled pork for this week. Never a dull day when we're doing these American stocks, I tell you. Like, we don't have any companies that you do pulled porks on in Australia that are anywhere near as interesting as these American businesses, right? Colourful, yeah.
Colourful used to be a bad term.
Have a good week.
In the stock market lexicon. If someone was colourful,
yeah.
Arthur Daly.
Well, I think it. Oh yeah, I think it still is probably bad, but who knows? We'll find out. Good luck with your electrical problems, which listeners won't know anything about, but we talked about it off air. Hope you get that resolved. Get some sleep. You're leaving anyway for a week,
off to
going to play some golf in Tasmania.
Oh,
we didn't talk about that
Sorry.
on the Australian show. We should have talked about that in After Hours. Yeah.
All right. Have a good week.
All right. Well, you have a good week. Thanks, TK. Bye.